Welcome to Trade of the Week with me, Zinati Guma. This week, the JSE Sasol, the Satrix Fini ETF, and Motus holdings are up for analysis. And joining us with his survey of these counters is Petri Redelinghuys, founder of Herenya Capital. Thank you so much for your time, Petri. How did I guess that you would be including Sasol in your picks for today?
I mean, maybe because it's up 10%.
Yeah.
Yes, right?
Yeah. And it was actually part of your stocks the last time.
It was indeed, yeah.
Yes.
So it is something that I'm going to pull up. We've got different versions of the same chart here. I'll pull up the messy chart.
I must say, I mean, I don't know if I'm a little surprised because I think when you were here, they had just released a production update, or maybe after you were here, and I saw that investors weren't so impressed.
Weren't so pleased. Today came the trading statement.
Yes.
So earnings per share is up by over 100%.
Yeah.
Because they went from a loss-making position to finally making some profit again. So would you look at that?
Yeah, I actually didn't think that it would come so soon.
Yeah, well, I mean, this is something that we've been talking about for a long time. Sasol has been under fire for a long time, and as we said sort of last time, it seems as though the shake-up and the reshuffling and the efforts that are being made to turn the ship around are starting to work. And we're starting to see it in the earnings. So there were some things that worked against them: lower average oil price, lower chemical prices and all the rest. But there were some things that did work. They won a settlement against Transnet. The restructuring is really starting to pay dividends, if you will.
Yeah. Okay.
So their efforts are being rewarded, and the trading statement is looking good. And this potentially is the start of a new era of Sasol, hopefully. And we can see the stock price really responding very well today. It did get sort of hammered down in the 2 days prior to this. So Friday and Monday were two relatively rough days, as you can see here on this chart. I'll zoom in a little bit. But the results came out today, or the trading statement came out today. Results will come a bit later on. We can see the sort of expectations and all the rest around that. But so far it's looking like we'll beat, and we're on track maybe to get to our 102 Rand target. And if we get above that, then we still have this larger scale sort of trend reversal. This is a very messy chart, so I have multiple versions of this chart. So the sort of larger scale trend reversal potentially at play.
So just walk us through that and the levels that you're looking at this point.
All right, so essentially, let's start with the bigger picture first, right? We zoom out. So the bigger picture here is we can even go to sort of a weekly chart if we want. And we've got this downward sloping channel that it's been in for the longest time.
Yeah, it looks
and
really
it's broken out, right? So a couple of things here. We can see our shorter term moving averages. In this case, we are using a 9 and 12 moving average, which are these two that are shown here. There's a lot of others that are on here. I've just sort of taken them away.
Yeah.
But we can see that we've got essentially a slightly more bullish configuration there. Now, it does sometimes give false signals here. It did give a bullish configuration, and that didn't quite work out. But for the most part, we have a bit of a bullish configuration on our moving averages. And we've got this breaking out of this downward sloping channel, and momentum with the stochastic seems to be on the up. So we have what's essentially looking like a long-term trend reversal, particularly with breaking this downward sloping channel, right? Then if we look at the shorter term period is where you get, let me go back one step, sorry. I've marked these two levels in blue, just with rough sort of scribble, right?
Yeah.
Essentially what we need to do is Dow theory, which is very old, is very simple, right? If you have higher highs and higher lows, you have an uptrend. If you have lower highs and lower lows, you have a downtrend. So what we need to do to confirm that we are seeing a trend reversal is we need to take out these two resistance levels. And you can see this one here and this one here are very, very close to each other. This one is technically slightly lower.
Okay.
So what we need to do is we need the stock price to get above this level, which is, call it 102 or 103, and then above this level, call it 105. Then we can say we have a higher high. If we then see a pullback, because the market obviously never moves in straight lines, we need to not pull back lower than 77, call it, right? Then we can say that we have a higher low, and we're starting to build the makings of a new longer-term uptrend, right? So we're kind of still watching for real confirmation that the trend has changed.
Yes.
And in the shorter-term picture, because we're traders and we like risk and maybe other reasons like we're stupidity or whatever it is, we like to trade these things shorter-term, right?
Okay.
Looking for a bit of excitement, if you will.
Yeah.
So from that perspective, we then have, let's move over to our messier version of the same chart. So in any case, so here we have a couple of levels. We sort of bought around here once this chart eventually loads.
What price is that?
So this was sort of around 80s, sort of low 80s, very high 70s. And we offloaded some around here, and we're looking to offload some more at around 100 Rand. Just give me a second.
Okay. So you just keep on taking profits whenever you can in the short term?
So yeah, we've been sort of trading it relatively actively. Oh, my apologies, man.
All right.
Trying to get this thing to load now.
But yeah.
Ta-da! Finally. Okay. So we were sort of buying around this space here, but look, we've been in the stock for a long time, and we traded relatively actively. So it goes from the biggest position that we have in our managed portfolios to one of the smaller ones, to the biggest ones, to one of the smaller ones. So as there's volatility, we're trying to make the most of trading this stock. So essentially, we see this 102 Rand and 40 cents level as the level we need to break in order to confirm, in order to make a new higher high. So for the short term, that is our target. We've been long here for some time. We bought twice. We sold already some at 90. We're sort of hanging on to sell the rest at 100 Rand. We actually have an order in. But if it gets above 102 Rand, then we still have a position that we probably will continue to hold for some time. And every time there's weakness or an opportunity, like a big sell-off like this, we want to buy more of it and then use a bit of volatility to make 10 or 20%.
So still able to benefit from the volatility.
Yeah, and I mean, if you think from 102 Rand down to 82 bucks, that's 20%. Back to 100 Rand, it's another. It's not an insignificant amount of return in a short period of time.
Yeah.
So you do that with smaller positions. I mean, this is trading, right? This is why we do what we do. So the levels that we're sort of watching at the moment is we'll probably see a little bit of resistance around 95, 96. Once we get above that, the next resistance level of any significance really is 102 Rand 40. And above that, it seems that we have clear skies. So, there will be some resistance levels going further up. But for the most part, we can then say that the trend has mostly changed. So unless something really shocking comes out of the earnings in a couple of days from now, in a week or so from now, I don't think, the fact that we have a trading statement to say, hey, guys, earnings is going to be much higher than expected.
So meaning the fundamentals are then following
the fundamentals are starting to change a little bit.
Yeah.
And, the chart indicates that, hey, there's a potential change. And then somehow the fundamentals always kind of fall in line with that. And we have a situation where the trend is changing. So we still remain very bullish Sasol.
All right.
Yeah.
All right. Well, let's get into banking. Financial Satrix Fini ETF.
Right. We're going to start with FirstRand. So what we actually want to buy is banks. But a good proxy for that would be the Satrix Fini ETF, right? So essentially what we have
Does it include other financial?
Yeah, so there'll be a Discovery in there and other financials as well. So it's not just banks. So you'll have insurance companies and all the rest. So it won't just be only the banks. But essentially what we're big fans of is FirstRand. So we see this little resistance level here. FirstRand is a bit of a lagger compared to the rest of the banks. So we think that we should have quite a bit of upside. So I will show you, for example, Standard Bank. You have a very similar situation where you've got this relatively long-ish period of flat. So it looking like it's going to break. Absa is in fact leading the way. So you can see here that this one has already started to break out of that resistance level. So that to us looks really, really, really nice. FirstRand we think is going to do the same, and Capitec, as you can see, is also sort of in the process of breaking. So I want to say that we're kind of happy to buy any one of these. Our preference would be FirstRand or Absa. So first FirstRand, then Absa, and then barring that, Capitec would be a good buy as well. Or you could look at this Satrix Fini ETF.
You've excluded Nedbank, and
I have excluded Nedbank. Yeah, sorry. No hate to Nedbank.
No. And you know what I've noticed, because obviously Nedbank has been coming out with trading statements and results, and just people have not been happy about that. Is that?
Not all banks are the same, right? Let's look at this. But Satrix Fini is a nice is a nice proxy to get into that if you want a bit of more of a diversified, longer-term play. We have, quite a decent sort of uptrend here over the last, about a year and a bit. And we also essentially have quite a strong resistance level around here, so it's a bit more to go, but once we get up above that, we'll do relatively well. Generally, though, we can quickly have a look at the Nedbank chart. I mean, they sort of all kind of look the same, right?
Would you have a specific timeline?
See, Nedbank's not playing the same game as the rest
but yeah, exactly. I can see.
So there is this temptation to buy the lagger, right? And this is something that a lot of people do. It's like, oh, well, all the banks are up except for this one, so this one will catch up, right?
Because that's what people did with ABSA.
Buy the winners. Buy the winner. The winner is winning for a reason, right? So ABSA is breaking out, Capitec is breaking out. First round looks like it's about to go. First round had a bit of a break and then a pullback. So you had that little excitement there and then pulled back under the level. So we quite like this one. But ABSA, Capitec, these are the leaders in the space. Rather buy those ones.
Okay. No, I hear you. Well, I mean, are you not worried about, I guess, the fundamental picture? We have, these banks warning about a distressed macroeconomic environment, one that could be maybe a little bit more challenging because of the tariff landscape.
See, I used to be a pessimist, and so the company logo is a bear, right? But I think over the years that's changed some. I think that South Africa will be fine. I see that our government tabled a counter offer to the tariffs, and hey, let's make a deal. So that's going to happen. We will not sit with the tariff situation that we have as we are now. We know Trump's game plan. He plays a hard hand, but he's willing to make a deal as long as everybody wins, right?
Yeah.
And okay, the only obstacle that we have is our own government shooting us in the foot, which they're really good at, right?
No stranger to own goals.
Let's not make any mistakes about that. They're really very good at that. But I also think that, these guys want to, they're not clowns. They will figure it out and we'll come to some sort of a trade agreement.
Yeah.
So I think that we'll be fine in the long run. I think that we have a couple of things. Yes, lowering interest rates is like bad for bank margins because of the whole interest earnings things. But at the same time, more people will take loans. More people will take home loans.
Yeah.
It's good for property prices. It's good for the consumer. So I think that we're in a space. Also, I'm relatively bullish commodities, if you haven't noticed. I think we've been speaking about this basically most of the time. That's going to be good for our economy in general.
Okay.
So I think we're in a good space, and I think that the future is better than what the past has been.
All right. What about the automotive space, Motus?
This is the same story, right? So let me just find it, Motus Holdings. There you go. So essentially, we are this is a bit more of a technical trade, but there's a bit of a fundamental backdrop here as well.
Okay.
If you're looking at car sales, the big German brands are kind of pulling out, and the Hyundais and all these sort of alternative Chinese and sort of call them Eastern brands are starting to make their presence felt.
Taking the country.
And the truth is, those are good quality cars for reasonable prices.
Yes.
BMWs and Mercedes are fantastic cars. Don't get me wrong, but they are crazy expensive when you can get similar or equivalent for half the price, right?
With all that technology,
Exactly. So Motus is a big distributor of those. We can see that they, the expectation is at least that these sales are looking better and that their earnings are looking better. So yes, earnings are coming out relatively soon.
And then lower interest rates.
And lower interest rates, which should lead to higher car sales, yes. So earnings are expected soon. I think their expectation here is on the 2nd of September. Okay. So we've taken a preliminary position. We bought today, so, full disclosure. Yeah. And we're expecting to see a trading statement. Okay. So the trading, if no trading statement comes and there's like a week before results, we'll bail. Because then that shows us that our expectation for significantly higher earnings will go unmet, and maybe we're on the wrong side of the trade. If that trading statement comes and they say, hey, warning, we're making a lot more money like what Sasol did, then we're in a very good space, right? Okay. So that's kind of our thinking. Then from a technical sort of analysis perspective, I'm going to draw some magic lines here. We have here a low and here a low, right? So if we connect those two, we have a bit of a higher low situation, right? And if we connect the corresponding lows on the stochastic oscillator at the bottom, we have, my drawing tools, we have lower lows.
Yes.
So that is called reverse bullish divergence. So essentially, think of your stochastic as like a momentum indicator, right?
Yes.
So the stock is managing to make higher highs, but this momentum indicator is pulling back deeper. So think of it almost like an elastic that's pulling further back. So this is relatively, well, at least in our view, a bullish setup for the stock, right? So we think that this is looking relatively good. And then you have the good old-fashioned little downtrend here that if we break above that, that would kind of be your trigger point if you're a formations trader or whatever the case that you could get in from here. I mean, you could even probably draw that line down to there.
Okay.
We'll go down to like a 4-hour chart so that it looks a bit better. So this is quite a nice little setup for us, and we're getting in a little early, but we think that we probably are hoping to catch it at a turning point. To be fair, you can run a very tight stop loss on this trade. So if you get below this sort of, call it R8.90, R8.80 level, you might want to bail. But here it's sort of, you know, where it is now, sorry, 88, not 8 rand. But here where it is now, it's sort of 91. You could probably take an entry here and you'd want to put your stop loss right below there, which is 89, 88. If you want to give it really quite a bit of space, you can go all the way to sort of 86 or 85. It kind of skews your risk reward, but you know, if you have a relatively longer term trend reversal situation here, you could trade for 110 or 100. If the trading statement comes out and it shows that sales are significantly better, profitability is significantly higher, the stock could get to 95 or 100 relatively quick. And, you know, it's the kind of short-term stuff that we want to try and capitalize on.
Okay. All right. Well, thank you so much. Really, really interesting insights that you have given us there, both from a technical standpoint and also some of the fundamentals that these companies are following. Really appreciate your time. That was Herenya Capital's Petri Redelinghuys. That's all for this week's segment, but stay tuned for lots more coming up right here on Business Day TV.